Okay, so I asked this question of Mr. Mark Evans, and he gave me a fascinating, and this was this week, so I'm going to compare your statements here. And I said to him, you can invest in the future of one, the US or China, over a 10-year period. Which do you invest in?
I'd invest in the US.
Why?
Okay, why would I do that? I mean, partly that we've got a track record and past performance is an indicator of future, but the main components of what has driven American exceptionalism over decades, more than a century, still are there. I mean, still partly because of immigration, but it's still the case that the quality of skills is amazing. The financial ecosystem, yes, it has SVB and FRB, but it also has the whole VC complex. I won't tape myself by only naming one or two of them. Of course, by extension, my host here is part of that. It has still the best mechanism of creative destruction in the world, I think. There's some who argue European competition policy is now stronger. I'm not totally convinced. Notice that U.S. competition policy has just been reinforced. It has a huge market and has ability to get market access. So it has all of that. And, they've just pivoted. America, when it moves big. And so in this space, in climate, which is one of the big drivers of growth going forward, they have the U.S. in this space of the time since we last spoke has gone from well behind Europe, the U.K., amongst the major industrialized countries in addressing climate change to putting in place, the measures now driving with the investment that they're they will overtake in the course of a few years. So I would do all of that for the U.S. And then with respect to China, I mean, yes, massive market. Yes, they've got all these components. Yes, they're going to do well in this. But what comes with that is, issues around property rights, consistency of government policy in some cases. I probably am better off leaving it in the why the U.S. is so positive than enumerating a bunch of issues in China. I think it's a simple choice. And what did Mr. Evans say of interest?
Mr. Evans agreed with you, and he agreed with you, citing several problems with China and also several positives of the U.S., which for his sake I'll probably leave for him to tell you over a dinner. Yeah. Can I ask you, for Europe, is Europe weaker than ever, Mark?
No, I don't think it is, actually. On the face of it, it's obviously there's a massive shock with the war and the energy hit that comes with that. And so there's reason to think that it might be, but I'm going to take the other side of this. First is that the financial system, this is unusual. I don't think I've ever been in a position in my career where I've been able to say the European banking system is in better shape than in most other countries, and certainly the U.S. in this case. But that is the case. So their financial system is solid. I know Credit Suisse failed, but it had relatively unique circumstances, and the core of the system is strong. The second is to say that they're using most of the levers of policy now, so fiscal policy is not a permanent headwind to growth there. Thirdly, they've got a pretty good framework in place for the climate, the net zero transition. So the U.S. is going to catch up and I think pull ahead, but Europe's been doing pretty well there, and that's driving investments. So I don't think they're weaker, and at least initially, and it's more than initial because it's been longer than a year, I think the European response to the crisis being the war, has made them stronger. It will make them stronger in the medium term. It's accelerated some things that they needed to do.
Can I ask Mark a really unfair one? And again, I'll blame Mr. Evans for this one because I can do. Which governments and big corporations are acting more than they're talking about climate initiatives?
I would say acting more than they're talking. Look, I would say a company like, and they talk about it, but a company like Walmart, in terms of, Walmart's got, I'm not going to do them justice, but it's certainly well over 1 million SKUs in their various stores. And if you, as a retailer, you ultimately take responsibility for what are called Scope 3 emissions, so the emissions all the way through the value chain, which means you need to know what the emissions are of all those products that you're putting on the shelves at Walmart. And they are rigorously going through that and then working with their suppliers to optimize those and get them down. And I don't know that, given the complexity and scale of that business, you could talk enough about it and still, given what they're doing, they're saying less about it than what they're putting into place. In terms of governments, this is recency bias. I was in Australia a few weeks ago, and I'd say that the shift at all levels of government in Australia is underappreciated. And, that's a pretty can-do country. So when you have a decisive shift, what we're seeing is a pretty big shift in activity there. And we'll hear a lot more about it.
Which are talking more than they're acting?
No, that was the unfair question. I thought it was a very fair question to ask me these. Which are talking more than they're acting? On the company side, I think big oil is talking more than they're acting. I don't think that the scale of this, in most cases, the scale of investment in the energy of the future, the relative investment there, which is a relatively small percentage of overall cash flow and a smaller percentage relative to conventional investment, is consistent with where the energy sector is going. So they all have a lot of talk, but in most cases, where the money is actually being put is not consistent with that. I'm going to give an example, which is that the reason I was in Australia is that Brookfield, company I work with, is leading a bid on a company called Origin in Australia, and it does a couple of things, but one of the core things it is the biggest generator and a retailer of electricity in Australia. So it's got about 4.5 million customers, but most of its generation is coal, and then they buy on a merchant basis in a bunch of gas generation. So as a whole, it's a meaningful proportion of Australia's emissions, 7% of Australia's emissions as a whole. And Origin basically had a shareholder base that liked the dividends that came from that core steady business. But in effect, it's a transition trap, because what they need to do for where Australia is going is to invest about 20 billion plus Australian in building up clean power, shutting down the coal, and operating for another 50 years, not another 10, 15 years. So we've been able to come in, we've made a bid at a substantial premium to, the undisturbed share price, a 50% premium. And we're going to, not have a dividend. We're not going to take a dividend out of it. And we're going to invest in that transition, the 20 billion plus, shut down the coal, move forward, and give the thing a future and make a good return for our investors accordingly. I bring that out in part because it's an example of the value of going to where the emissions are and the scale of what that, but also to try to illustrate the broader point. I think there are a number of companies that, and in the energy sector, this is one of the challenges, that aren't moving fast enough for where the world's going and have shareholder bases. And part of the reason is they have shareholder bases that have a different horizon and could get to the point where the terminal value of the enterprise is being affected. And so what appears to be a good yield in the short term is actually quite a poor yield over the medium and long term.
The subsequent question is very much the same as in technology then, is will those incumbents embrace innovation and move fast enough, or will we see innovators embrace, bluntly, distribution and engage with distribution fast enough to challenge the incumbents? Where does the value accrue there in your mind?
Yeah, I think that's the history would say that it's more likely to be the latter, right? We see that, time and time again in technology. We saw it in the steel sector, classic example. It has a fancy name, the Innovators Dilemma, Clayton Christensen's work on that. So it's almost the default. And the challenge, there are exceptions to this. Netflix is an exception to this. Amazon was early days. Amazon was an exception. Microsoft, I guess, in technology would be an exception. So it's not destiny, but you really have to fight against it, and you do have to not cannibalize your business, but you've got to. Well, in effect, you do have to cannibalize your business. You ultimately have to take the cash flows from a very nice business and invest on something that's not a sure thing, and that's hard to do.
Final part of that question: which governments are talking more than they're acting? And then we'll do a quick fire.
Yeah, I think I am the United Nations Special Envoy, So I would have said the US, but I can't say that anymore. I think it's a relative game. So I'd now say that, the time has come for the next phase of what the UK is going to do. Maybe that's the best way to put it, right? So it's like anything. You can be out in front, you can be leading, but then others catch up to you, start to lap you. So I think the UK has had a good track record, but I'll quote the Climate Change Commission, which is this independent body that does an assessment of the government. It says that more than half, it does not yet have everything in place in order to reach its medium-term targets, and has given 300 different recommendations of what's necessary to do it. So I guess that would fall into the talk more than act.
Well, that's good. I'll ask Rishi on the show when he does come on, ask him about 300 different recommendations. That must be fun.